Hello, welcome back to this week's market update. Today is Monday, June 15th, 2026, and we'll jump right in. Looking at last week's market performance, stocks recovered in the second half of the week as optimism surrounding a potential U.S. Iran agreement improved investor sentiment. A peace framework was later announced over the weekend with a potential formal agreement to be signed later on this week. As of Friday, June 12th, the Nasdaq Composite led with a 0.7% gain, followed by the S&P 500 and Dow that closely followed. The market was also supported by the highly anticipated IPO of SpaceX on Friday, which helped reinforce enthusiasm surrounding artificial intelligence and growth-oriented stocks. Taken together, improving geopolitical risk and renewed strength in risk assets have left market conditions constructive headed into the new week ahead. Moving into our week, SpaceX completed its highly anticipated IPO last week under the ticker SPCX, pricing shares at $135 before opening at near $150 and moving higher throughout Friday and Monday morning here. Investor enthusiasm has been fueled by the company's exposure to two of the market's strongest themes right now, AI and the commercialization of space, while anticipation of the rapid Nasdaq 100 inclusion has also provided a tailwind for demand for the stock. At the same time, investors should recognize that the company trades at a high valuation and remains unprofitable right now, leaving little room for operational missteps. Time will ultimately tell whether the valuation is justified, but for now, market enthusiasm seems strong, and the IPO has been a clear success in its early days as a public company. Shifting gears into our more regular economic data, we did have a big week for inflation, as CPI and PPI both showed the continued impact of higher energy prices in these different indexes. So first, taking a look at May's CPI, we saw that rise to 4.2% on a headline basis, core inflation trailing a bit lower at 2.9%. On a monthly basis, headline prices rose 0.5%, while core prices rose just 0.2% below expectations. In the next slide, we'll take a look at the categories driving this month's CPI print. By category, energy remained the primary driver of inflation, with broad energy prices up 23.5% from a year ago. More specifically, energy commodities were up more than 40% from a year ago. Electricity prices were up 5.9% from last year. Groceries were up 2.7% in the year. Shelter continued to show more moderate inflationary pressures, up just 3.4%. That has been slowly trending lower, while vehicle pricing remains soft, with used car prices actually down 2% from last year. New vehicle prices up just 0.2% from a year ago. Outside of energy-related categories, price pressures remain relatively moderate and controlled. However, with energy serving as a key input across most of the economy, if prices remain elevated for an extended period, those higher costs could eventually flow through to a broader range of goods and services. For now, though, it looks like a peace deal with Iran is on the table, and so that should start to support energy prices. We've already seen that at the gas pump in the last week or so in June here, but it is still a risk on the horizon. May's producer price index came in hotter than expected, with annual wholesale inflation rising to 6.5%, its highest level since November of 2022. While core PPI, which excludes food and energy, increased 5.1% from a year ago. So a much hotter reading on core there compared to the core CPI. And then on a monthly basis, headline prices were up 1.1%, while core prices were up 0.8%. Similar to CPI, energy remained the primary driver of inflation in the PPI, rising at 10.7% during the month. Food prices increased a more modest 0.6%. while goods prices as a whole rose 2.8% in the single month. Services inflation was more contained at 0.3% in the month, although you can see some different dynamics with trade costs down 1.1% in the month, while transportation and warehousing, a very energy-centric category, that was up 2.6% in the month. Now, while consumer inflation has remained relatively concentrated within energy-related categories, we're starting to see wholesale inflation suggest that these cost pressures are beginning to build more broadly across the economy. Now, as I mentioned in the CPI slide, we are getting a peace deal hopefully this week that should provide some quick relief to energy prices. Although we have still endured several months of elevated energy prices, at some point producers may need to pass on to consumers. Moving along in our week, consumer sentiment improved slightly in June, with the University of Michigan Consumer Sentiment Index up 9.2% in the month. However, even after the increase, sentiment remains more than 19% lower than a year ago, highlighting how consumer confidence continues to sit well below historical norms. You can see it's really been depressed since just about the start of COVID in early 2020. The monthly improvement was driven by stronger forward-looking expectations, with the index of consumer expectations rising 11.8% during the month, while the current economic conditions index increasing a more modest 5.7% during the month. Year ahead inflation expectations also moved slightly lower, declining from 4.8% in May to 4.6% in June. Even so, inflation expectations remain well below the 3.4% reading recorded in February prior to the onset of the Iran conflict. Last but not least, we did get our initial weekly claims last week for the week ending June 6th. They rose modestly to 229,000, up 4,000 from the prior week. The 4-week moving average rose to 219,000, up from 214,750, continuing this slow but steady upward trend since it bottomed below 200,000 in April. Although claims have been drifting higher since these lows in mid-April, they remain at levels historically consistent with a healthy labor market, and alongside the May stronger than expected jobs report, continue to point to labor market stability in the near term. So that concludes this week's market update. We really appreciate you tuning in, and we look forward to seeing you again very soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.